Hi guys, hi everyone. Sorry I'm running late. I'm not gonna waste any more time. I'm just gonna get to everything. Um, so overall, we had I guess if you're this is futures. Um, Basically, it's kind of a mishmash. It's about even here. Um, and then if you're looking at the U.S. market overall, we were down, I would say. The VIX was a little bit less volatile than it has been in less than the past couple months. Um, the VIX was down basically 2.5%. NASDAQ was just breaking even basically, and Dow Jones and S&P were both negative. So especially the S&P was oh, not good. Well, it was the Dow Jones that were more negative overall. I think depending on what you were in, there was movement up and down. So you haven't had an opportunity to go up and down. But I think overall it was more positive early, and then towards the end of the day things started going down. Um so now let's go here to Tradestation. And let's just start with uh, the positive items. Uh, like I said, overall week, I think we had more of a down day. It felt like, but in the beginning, things were going up. So you had basically over 2%. You got AMD, Uber, which was on the watch list for me for the week. Campbell's is up. It's nearly 45. Guys, if you're still interested in Campbell's, you can get in it. Um, so let's look at AMD. We'll start out with AMD. We basically, over the past few days, it's been going up regularly. Um, and then overall, we have a trend that looks like it's going up. Chips, initially, they were hit because of all the laws being passed where you couldn't do certain things in certain foreign countries. But now it seems like chips have recovered. Um, and I know that Intel and uh, what's the other one? NVDA were doing well. So I'm assuming AMD got the benefit of that. But basically, 4 solid strong days after a pullback. And it looks like on the 50-day and 200-day, things are moving up. So we can assume that, let's see if this will, I don't know why this is acting like this. Huh, that's kind of weird. Now I have to click it each time. Okay. So we can assume that we are getting into, I don't know if this is, okay, we're not at all-time high, but we're at previous, what I will call all-time high. I'm not going to go back and verify that, but I think it's around this time in 2022 to 2023, we can make that assumption. So we're getting to previous all-time highs, and then we know what happened after this. So just watch out, be careful, you know, that's all I'll say. Uber, we've traded this in the past sometimes. Same thing, not as strong as the chip stocks, uh, but it kind of goes along because I think you said that they're both in NASDAQ. So they kind of go, people would like you to think that Uber is a tech stock. Um, so we'll just call it that. I guess they're doing stuff with automated driving and stuff. So
Yeah, they want you to think it's a tech company, but it's really not. It's just a scheduling company, and people get to drive you where based on the schedule.
So this went up fairly nicely today. Um, you just had to stay in it, and yeah, you know. Campbell's, we like this. Um, we told everyone to get in here. We got in here, made money. I don't know. I think you're probably still in it. I got out, but we still have a ways to
I
go.
had gotten out. I had gotten out.
So you see where we were at early spring here. So you still got $10 to go if you're willing to hold on to it. Um, you know, like could have bought it. Here was a down day. Could have purchased it a few days ago. So if you're one of these people, hey, I don't know what to buy. I'm just getting into this. I you know, I don't know how to make money in this. I don't want to be trading every day type people. Buy Campbell CPB. We'll put this on the notes, but buy Campbell CPB at the current price or wait to a slow day to buy it at a dip. But just buy it now. And then when it dips, buy a little bit more. When it dips again, buy a little bit more. You know, every dip, just buy a little bit more. Whether you buy 25, 50 shares of it, and then just hold it for a few months. And then in April or so, as we start to warm up, even March, if you're too lazy or impatient, sell it when it gets to 55 and take your $10 per share and run. You know, Elisa, if someone were to buy 100 shares at 44.80, and then on April 1st, she'll sell those 100 shares at $55. Let me know when you get a chance how much profit that person would make. And while she's doing that, I'll talk about Dollar General, which we don't like, so we're not going to talk too long about it. We haven't been recommending buying.
1,020.
So $1,000 and 1,020. So $1,020, and that's, let's say, all of January, February, March. So that's 3 months from now. So in 3 months, you could have $1,000, over $1,000 by just buying 100 shares of Campbell. We're not asking you to buy something crazy like, oh, buy 1,000,000 shares. How much will 100 shares of Campbell cost at its current price of 44.80, Elisa?
You would need to have at least $44,000. 44,800.
Means 4,400.
Oh yeah, sorry. I put 1,000 by mistake. All you need to do, or all you need to have is $4,480.
Yes.
And you will be
So
making $1,000 out of that 4,000.
so if you had, let's say, $5,000 saved up in your like account, your savings account, you've been saving to buy a house, you've been saving for something simple, whatever. And you said, hey, I want something to get into stock, something easy, something that I can just come in and buy something at a low, sell it at a high. You would do this. You would take your 5,000, buy 100 shares, and then you would say, oh, okay. So we'll just go back real quick because I want to stress this while we're talking about it. You would take your buy it now, you would set a program, uh, a sell option. Well, not an option, but a sell. Select a sell. A basically a sell button or whatever you will call it. You would basically sell this at $55. And you would set it there, you would forget it, you wouldn't think about it, and then you would get notified once it's sold. Okay? And then after it's sold, you may say, okay, let's see, maybe I'll get to $60. Maybe, with this 60 is 57, I'd probably put a short option uh, 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 to short it, these shares at 60. See if it touches 60. And then wait a few months, maybe you wait till the winter, a few months after that, and let it get back to 45 and then sell it there. Or maybe it hits 60 and you say, I'm scared. I don't want to wait. I'm going to sell it at 55. So just get your money back. Little stuff like this. This is the low point that we had already established that it
And
does,
you're making $1,000.
and it's in only a few 3 months, we said. All of January, all of February, all of March, and boom, you got it. So it's something that you could do now, even though, yes, it's $5 above the ideal spot to buy it at. It's still another $10 that is going to go. This is soup. Okay. Now, yes, could some terrible news come out about Campbell's that they're, um, holding children in basements or something like that as a company? Yes. But we know that's not going to happen. We know everyone loves soup. We know as we get into the harsh time of winter in this area, people are going to be eating more soup, and it starts
If there's
gonna
and the
slowly go
weather
up.
will certainly help you guys. So
Weather, the
this,
snow, so for the course of the winter, and then it will level out as we get to the spring, and it will be high. And then as we get to the warm weather, the second quarter, third quarter, it will slowly drift down until we get back to the winter. So the, this is a pattern that repeats itself. The pattern will change slightly. The pattern may dip a little bit lower, like it went a little bit lower than 40. The pattern may go a little bit above 55, like here, got to 57. Maybe next time it'll get to 60. But it's a pattern that will repeat itself because it's soup. And people eat soup in the wintertime, no matter whether you're in the Northeast, the Midwest, the South, you eat more soup in the winter because soup
and
is
to prove you
generally
even
hot.
more, and to prove it even more, if you're not convinced, can you look at the monthly chart for the folks and show them how long this company has been around? If you're not if you're not totally convinced, this will convince you guys. So it's legacy company. It's been around more than 20 years. And it's really not rocket science. It's not really a technology company. It's just soup. And there you go.
So it's just something that I wanted to tell you guys because it's an easy play because some people had asked me about this. And I'm telling you now, open up account, whether you open up in Robinhood or Tradestation or what is there now? Schwab, I don't know all these brokers that they have now. But
It doesn't
just
matter.
open an account,
Get $5,000 into the
okay,
account, and that's
and
it.
to buy it at that level because the trend shows it. And we have established those levels. Uh Google. So Google's been going up daily. Let's see where we're at here for Google. Uh, let's see. So Google's still going up. Uh, our level here, it hasn't gotten to this level. So once we get to that level, we may decide we want to let it slide depending on how things are going with the economy. We know they're always gonna meet their earnings reports. They're always going to be making money. So right now, Google's just acting like everything else. And it's just going up because we've had, last week, we've had a week of the market going down. And this past week, things have been rebounding.
Que lo quiere
You know,
gente.
so um, so now let's see, where are we at? Amazon here. Amazon's a little bit weaker. They've been dealing with lawsuits and all of that kind of stuff. Um, but it is trending up just at a slower pace. Uh, this basically is going to be a level, even though it's a little bit jagged. Um, uh, so you still have $80. I would be to 180. I'm sorry. Basically, where it's at now, about 150, 155. So you have $25, $30 to go. I would be a little bit hesitant to go full fledged in Amazon right now, uh, but it's something that I think eventually, if I was going long, I'd probably pick Google over Target. Even Target that was doing terrible, absolutely terrible. It got down to $110 because it was in the news, because people didn't like some certain things they were doing. And even Target has rebounded, you know. What was this? This was back in 2020. COVID, it basically got, you know, basically another $10, $15, it would have got to its lowest point during COVID. And it basically got there. And you could have bought this when it leveled out. It did a jump up. And look at it now, 110. Look, we're at 143. That's easy, an easy $30+ about to be $35. Okay, we're gonna get here eventually to this 160, and you could just say, hey, I'll cash out here. Basically, that's this level, this 130 level, or I'll ride and hold it to the 160. But it will come back. It will take some time, but it's gapping back up. It's gonna fill this gap here where it had gapped down. It's gonna get to this level where it likes to be, and hopefully it can maintain this level. But no matter what, it's still gonna get here. And this is an obvious, obvious, obvious sell point. So this is another way you can say, hey, let me get in here. And yes, you would have liked to hit the bottom and got at the bottom, but you didn't. But it is on an uptick now. Uh, be careful. Uh, November, it had its Q3 earnings, third quarter earnings. It will have its Q4 earnings. It'll probably do relatively good. It will give it a little bit of a bump, and then it will slowly start to come down. But by then, it should have hit this 160, and you can get the hell out of Dodge. So Dick's Sporting Goods. Let's see what we have here. Uh, so it basically hit this 150 level, not as strongly as I would have liked. So it's crossing right here. This red line, this is the 50-day moving average. It's crossing over this blue line, the 200-day moving average. So maybe it's going to come back and hit 50. I'm sorry, 150. But I don't know if it'll probably hit it. But then it could be weak. I still have a bias a little bit against this, even though the Q3 earnings were good because of what they did and said here. and their lame excuse about people stealing was the reason why they didn't beat earnings here, why they failed miserably. That was just kind of a ridiculous response, I thought. So I don't know what's going
And
on
you
with
were
this.
right.
I don't know what's going on and what they're doing with these numbers, and like if something's being hidden where it's like the next quarter is going to be freaking negative 25% again. It just seems weird to me. So you may get it tapping 150, but I would be really careful with this about this tanking, especially um you may get a little bump up for Q4, but it could be better fish to fry. Um, and other things to look at. If you do get in it, just watch it closely. Um, Walmart has been very stable. We over the course of this thing, we've liked this much better than Target. When Target was going down, we only liked Target when it got to the bottom. Walmart, this was probably people taking earnings because earnings were good, and this level was, I think, all time high. Yeah, it was new all time high. And we had talked about when was Walmart going to start to go down from people taking their earnings, and I guess it hit this. And when Walmart drops, it drops, you know. And we've seen it like here after earnings. It had earnings and it basically dropped right at earnings, even though earnings were good. But because this was all time high, you shouldn't be surprised that it went down, even though there was a good earnings. It beat earnings, it beat revenue, it beat its earnings, but you can see here still it had a drop from here down to here. And that's just because people wanted to take their money. So as you also can see, when I zoom out, you can see the red 50-day moving average line is going down. So you're probably um gonna have this start tanking a little bit. Um and especially we're gonna we're gonna go into what is this Q4 and then Q1. And it's the new year. People are not going to be spending money for a while. So you're going to see this come down. So if you didn't get it up here and you want to say, hey, like maybe I'll average in, maybe it comes up a little bit and then I'll average in. But based on this 50-day moving average, this will probably be heading in the downward direction soon. So you could probably say, okay, let me buy in at 160, 159.20. I'm just using whole numbers. Um, and get out $10 later. Or you could say, hey, I'm gonna go for the goal, see if I can hit this 140 level, you know. But people are gonna be taking profit and you may have to wait a little bit longer, you know, um, maybe towards Q1 earnings coming out. So that may be 4 to 5 months. Um, but it could be worth it if you get at 160 and sell it for $20 more. You know, if I don't like Walmart as much because it's so slow moving, and when it does move, it just jumps or whatever. But if you want something simple for retail, that's kind of like an obvious play. You just gotta wait a long time for it. Dollar Tree, um, we this let's see what's going on with this. This is showing that it's going up. Not sure why, but it's probably just based on the trend. Uh, but I personally believe this is going to be heading down. Now you may get a little bit. I could see this getting a little bump for Q4 numbers coming in, and then let's say you get a bump up here or maybe this gap fills up to 160. But this thing is going to be headed down as we get out of the holiday season, because it looks like
Dollar Tree always does that.
it
For
looks
every earnings, there's a gap down.
yes
It,
it
it
looks
yeah, so I can see it get to 150 and then drop.
it looks like I don't know if earnings are going to be as good as people think it's going to be. So I would be prepared for it to drop. If it got up here, 150, I could see myself 150 to 160. I could see myself shorting it. And I do sometimes have a short bias, but it's just honestly, it's that time of year. The only things are going to be going up now is going to be freaking exercise stuff, Peloton, Peloton, um,
Campbell,
chemicals, uh,
Beyond Meat.
stuff like that. That people like, stuff that you would think, New Year, New Me type taca that people do every year, And then once they get into quarter 2, they're like, okay, let me get back to normal. It's getting nice out now, so I can forget about New Year, and get back to my normal routine. Um, we're looking up the past few days here. Microsoft, I have some ice breaking around my house here. I can hear it. Microsoft, um, it's been very strong. It's just like NVDA. Eventually, it's gonna have to come down, but I wouldn't be the one to, it is like it consolidated here. It's consolidating right here, as you can see this, people. So it's consolidating at this 375 level, and it could come down a little bit after it's finished consolidating. So you could be like, hey, I want to gamble with it, but you never know. You see the 50-day moving average, it looks pretty strong. Doesn't look like it's going to turn. If you decided to take it here, it would be a guess. Some people will wait until it picks a direction, you know? A lot of people would say, hey, I want to wait until it picks direction. Some people will say, hey, well, this is all-time high. I want to go in while the getting's good. And since this is an all-time high, it's consolidating now, it's going to drop a little bit. Some people would take that risk. Some
Yes,
people would
you
say,
could
don't
take
take
and
that
if you want to take that risk, you could start a little bit, not with a lot of shares, and then maybe if it goes a little bit above what you estimated, you can average in, but you will still kind of be at the top.
Yeah, so if you want to buy a few shares just to watch it and
Yep.
see if it starts going north, but if it comes back south, you're like, all right, let me jump on the bandwagon and get a few more. But the trend shows that it's going up, but this is a lagging trend. It is a 50-day moving average. And lagging trends, they don't show you things as they are. This trend right here will show you what was happening 50 days ago. So this trend is probably representing what is today. The first, so that's 30 days plus the 12, and then we'll go 20 days here, 40, 50. So it's probably representing this as this area right here as this going up. Okay, so it hasn't represented this yet, or whatever, because it's 50 days out. So this is why 50 days later it might start to trend. So when you're looking at something that's lagging indicator, it gives you what has happened in the past, but you can't, like, you have to make your own judgment. And it's just whether or not you feel that, hey, I should risk it for the biscuit and go all in, or let me just wait, and when I see that it breaks down, then I jump on it. Or when I see that it breaks out, then I jump on it. When it breaks down, I jump on it going short. When it breaks out, I jump on it going long. All right.
And there's
Not going
nothing
to
wrong
get
with
through
that.
everything, but I just I'm trying to do a little, since we haven't done a review in a while because of the holidays. I'm trying to do a little bit more in-depth conversation. Um, so we obviously know EBC, Eastern Bank, is going up. We like this. Um, uh, we tried to get it at our ideal spot 10. We didn't get down here. We got to this level around this 1070 mark, and we were hoping that it would get down to 1030, 10 to 1030. It did it. It was strong. It's too late. 50 days crossing. This is a cheap stock that you can get into. This is something that I think is a good stock, as hopefully, as interest rates go down, hopefully housing prices will go down. People will start to get loans, private loans, bank loans more, and then that will help banks. And so then we can get back. We have all these levels. We have 16, 18, 20, 22. So all these levels you can buy here at 14 and just hold it. And this is a stock that you can at least 100 shares, $14. That's 1,400. If you buy it 100 shares,
Correct.
so and then okay, it goes up $2 a share. What's that gonna give you? $2 times 100 is what? 2,000.
Yes, ma'am.
So
Wait, $2 times 100?
yeah.
Isn't that 200? Yeah, $2 times 100 is 200.
Oh shit. What am I talking about? Oh, $2 times. Oh yeah, if you're only getting 100 shares or whatever.
Yeah,
But so
if you get 1,000 shares, then
yes,
you would make 2,000.
yeah. So it's
But
like
yeah, because it's a relatively cheap stock, we would recommend you getting,
yeah,
roughly
a good
maybe
amount.
250, a good amount, maybe 500 to start.
Yeah. So you can get this amount. So let's say again, you have your $5,000. You can say, hey, let me, I didn't get in near this 10, but in your mind you say, hey, when the banks were doing terrible and everything was about to go bust, and Eastern Bank's a smaller bank, and they still maintain and didn't even get to their opening, to their initial IPO price. So that shows that it's relatively strong and that people like it, you know? So you can say, hey, this is going up back to its level. So let me, buy 200 to 500 shares, try to get it around 4.
Especially since it dipped right now, because it did a little dip, you could get it now. See if you can get it at 14, and then see if it would go up, like you said, $2.
So get it at 14, sell it at 16, or maybe you wait to 18. So it's a lot of things. This is another set it and forget it, just like Campbell's. And it's at a cheaper price point. So you don't have to be getting all these things that are uh uh Tesla type stocks like Tesla that move like crazy and they're
You
mad at
don't have to get NVDA. You don't have to go get ASML. You don't have to go get AutoZone. You don't have to go get crazy expensive stocks like Costco. You can
so
get something between $15 and $100, and you will be just absolutely fine, if not better, because then you can get even more stocks.
so this is Apple again. If you have been paying attention to the market, this is for people who actively pay attention to this day in and day out. You will have known Apple's one of the strongest and best stocks out there currently. We had one, two, three, four, basically five, six, seven, 8, 9, 10, 11 days of it basically going down. Like you can say, oh, this was one green day, but it was basically still going down. It kind of maintained itself, then it went down. So I would be like, man, okay, when can I buy in or whatever? So, maybe you were like, what's going on here? Oh, it did a big gap down. At that gap down, probably would have bought a little bit. Oh, kept going down or whatever. But now that you see it's starting to recover, now Monday would have been a nice day to say, hey, let me buy a little bit of this on Monday because this was Friday. Okay. This candle here that hopefully you guys can see this. Each of these lines is a candle. This candle was Friday. It's sold off. On Mondays, usually a stock like this is going to come up somewhat after it had been selling off all week, basically the 2 weeks. And so you're like, oh, okay. Maybe Friday evening I get a little bit of this before the market closed. You wake up Monday morning, it's already popped up. And maybe you're like afraid. I don't want to hold it to Tuesday because Tuesday can be kind of a day where things go back down a little bit. So you sell at the end of the day, Tuesday, boom. You just went from 180,
You mean
181.
Monday? You sell it at the end of the day on Monday.
Yeah, or we're at the high of the day on Monday. You just went from 181 on Friday to 185. This is something that you would jump in this if you had been paying attention and Apple was one of the stocks you were watching. But if you pay attention to the market, Apple's one of the best stocks you can get. So Apple represents a high percentage. It's the number one weighted percentage in the market. So if you see Apple's going down, the market's generally going down, and usually it's not just going to tank like that because it's a good stock. So when you get an opportunity to buy Apple when it goes down, oh, Friday evening, next week's the new week, is starting fresh, will probably be a good time to buy. So this was Friday, this was Thursday, this was Wednesday, Tuesday, this was the Monday where it just went cray cray or whatever. So that Monday started it going crazy and then it went down all that week. Now, after that week, I would have been like, man, it had this big gap down. Let me get 25 shares of this to see what happens on Monday, you know? So it's something like this. This is another easy, oh, hold over the weekend, another easy $7, $8, and then you sell it on Monday just like that. So little stuff like that, if you pay attention and you're into things, you can just buy it easily. Um, Macy's, we know what's been happening here. You having entrepreneurs trying to buy Macy's, and I guess sell it off for pieces or whatever. Um, if the sale doesn't go through, this thing will drop like a rock, mind you. And it seems like it's already trying to drop. So be careful there because I think if there was going to be a sale, you would probably see it keep going up. It seems to be sliding down, but and also it's sliding down at the right time because this is getting into the time of year when retail doesn't do so good. We don't have much time, people, so I'm not gonna go through everything. But I'll just show you the negatives for the day. Peton. Peton, it had a down day after being going up like crazy. It got to 7. If it gets back to 7, you better start shorting it because it seems like it already filled this gap here and it already got up. And so this thing, when it comes back up now, by March, this thing is going to be down in the gutter because the new you, new me is going to be gone from people's mind. Open.
Please.
That's another one. I'm in this one right now. I got like freaking probably what, for almost 5,000 shares. This thing, as we get